Hello, everyone. Welcome to Kryptonized. Again, by myself. I want to do these things a little bit more because as I'm studying the market, what's going on, I want to let you know what's going on. And so I thought I'd introduce this episode a little bit differently, talk about kind of my foundation for how I evaluate crypto and what's going on in the markets. I don't think it's like everybody else. I'm not the huge cheerleader that everybody else is. I am a huge believer in what crypto is going to become and what it is today, of course, but it's going to be much more powerful in the future. So look, my foundational statement as to how I evaluate this market and things. Anytime you have crypto assets that aren't backed by real value, the only way to maintain that value to people that own it or have tokens is to either get more people in, what I call suckers, to buy it, or you lose all your money. There are some exceptions, like true cryptocurrencies that generate fee income and that are used in commerce because there's value to that. The dollar doesn't provide any value other than being a currency. So I can see that working, but those are going to be very few and far between. Unless they're providing other value like we'll see in Gen 3, Gen 4, maybe even Gen 5 currencies that are crypto. What I'm most excited about are coins and tokens that provide real value, not the meme coins that some of you are investing in that provide no value whatsoever. It all relies on other people getting in. That's the definition of a pyramid scheme. I'm sorry, but that is a fact. It's not producing anything of value. So how can you derive future benefit from something that's just relying on people to continue to buy to push the marketplace up? You know what I'm saying? In the end, you make returns on productive assets or value contained in a crypto that is backed by real assets. For example, Ethereum is the former and stable coins are the latter. Ethereum is productive because it provides a platform, more like a Windows 10. It's not there yet, but it will be, where others can build on top of it, and there's a charge to those users in the form of gas fees, and who knows what else will be in the future. But it's providing a real value. I don't have to build another Ethereum blockchain. I'll just build on top of theirs and utilize everything that they have, including liquidity. There's value there. And stable coins, of course, they provide some stability, and they're backed. The ones I like are backed by real assets, not algorithms. Now, with that as a foundational statement of how I approach crypto and evaluating it in the markets, let's take a deeper dive into why I don't believe we've seen the bottom, unfortunately. The answer is leverage. Too many whales and investors were leveraged to the hilt, still are. And then when Luna and Celsius took a dive off the cliff, it caused a wave of events to occur, which is now putting immense pressure on these leveraged whales and institutions. In fact, I think look at it as a little domino effect. Because they've lost so much money on it, the market's taking a dive. Anyone leveraged is now being called to pay back that leverage, those bets that they were making. And this is going to cause a lot of issues. I'm going to use one example, and I've borrowed from many people that have looked at this, so this isn't all my original thinking, okay? But that's the way it is. I'm a single person. I can't investigate everything, but I will tell you my observations. And by the way, Kevin O'Leary sees more pain ahead for crypto as well. He's not somebody that messes around with the truth or making you feel good because he wants to make you feel good. So I want to use Three Arrows Capital based in Singapore. Well, actually now it's Dubai. And I may or may not refer to them as 3AC, as quite a few people do. But Three Arrows is one of the largest crypto-focused venture capital firms in the world. The CEO is Su Zhu, I think that's how you pronounce his name. Their assets under management were estimated to be between $10 billion and $18 billion. Definitely a top VC firm. Their power and their influence they've spread all over the place, and everybody knows these guys. However, they were leveraged to the hilt, and I think that's been confirmed over and over again. The thing, normally I'd be sympathetic to these guys because I don't think he went into it with the intention of defrauding anybody. I really doubt it. I think they're really serious about what they're doing. But what I tend to look at is the CEO themselves and their attitude towards the community, like the CEO of Luna. Suzu and the CEO of Luna were mocking people along the way. And, who does that? Who mocks the community that wants to support you? For example, he mocked Ethereum and people that were Ethereum holders. And then later, after it went down, in part because of his comments, he went back in and purchased Ethereum. So this guy makes all these claims, mocking people, and then tends to profit from that. It just leaves the wrong feeling in my stomach. And it seems like karma might be playing out a little bit here, but we'll see. So recently a company came to at the DeFi Edge, which is, they produce a lot of great content out there. You should follow them. I'll put their name up on the screen here. So some of this is coming from them. But they were mentioned that they were ghosted by Three Arrows and that they've talked to two other protocols that Three Arrows had invested in, because Three Arrows is a venture capital firm, and also mentioned that they were being ghosted by them too. Now, why would a VC firm that was investing in these companies be ghosting the companies they invested in? Usually it's the other way around. The companies that are doing badly don't want to talk to their VCs because they want to give them bad news. So this was odd. Well, it turns out that Three Arrows was taking the money that was earned by these companies and was investing it for them and giving them back a guaranteed 8% APR. So the treasuries of these other tokens that Three Arrows was investing in, Three Arrows was managing. And it doesn't appear that they were separating out those investments. They were just pooling it all together. So it's hard to track on the blockchain where your money that you had obtained from your protocol that Three Arrows had invested in was managing. So now 3AC, holding the treasuries, leveraged to the hilt, is getting called. What do you think's happening with the money or the crypto that's being stored in the treasury at Three Arrows is going? We don't know for sure, but it seems suspicious if Three Arrows is ghosting those companies that they're holding the treasuries for. So if Three Arrows really is insolvent, you can bet the companies they are holding treasuries for are too. And you can see on the screen who these companies are. Some of it's Bitcoin and Ethereum. They're not going to be insolvent, but it would put downward pressure on them, given this is one of the top VCs in the world. So if you're one of these companies or you invest in one of these companies, beware that these things might be in big trouble, especially if Three Arrows was managing their treasuries. So let's dive a little bit deeper into what happened. So Three Arrows backed Terra Luna before the Terra collapse last month. In fact, reportedly, they spent nearly $600 million to buy locked Luna, which is now worth roughly $670. So $600 million, $670. That would put pressure on any venture capital firm, no doubt. There is speculation, and I do want to say speculation, that the massive losses of Luna caused them to leverage even more to try and earn it back. Because remember, they're holding the treasuries of those other companies that I just mentioned, and so they have a fiduciary duty to those companies in order to not only maintain the 8% APR, but to pay them back what that was given to them. So how do we know how liquid Three Arrows is right now? We know in the past that Three Arrows has made some great investments, but many of those investments are locked in liquid for years. You could stake and you get a yield back, but you have to guarantee staking for a year, 2 years, 3 years. So we don't know. But if they are margin called, it would be tough to repay some of those loans if they don't have the liquidity available. And that appears to be the case because of the losses they sustained with Luna, and who knows, it might have also been impacted by Celsius as well. Some of this has been confirmed not only by that whistleblower that I mentioned earlier, but also one of the investments that Three Arrows has had, a company called Finblocks, what they had stated earlier today, which is basically, hey, we don't know exactly what's going on, but Three Arrows was one of our investors, and they need to suspend reward distributions and withdrawals because they need some clarity as to what's going on, not only with Three Arrows, but this volatile market. So this is the beginning, I think, of more downward pressure on the crypto markets as well as Bitcoin, because Bitcoin's kind of the barometer for all these things. Okay, so again, a disclaimer, we really don't know the situation. We're just looking at the behavior of Three Arrows and some of the companies they've invested in and what they're telling people right now. However, if what is going on is true, that they're insolvent or heading that direction because of all these margin calls and they have assets locked up and staked for years, this is going to be catastrophic because there's so many companies that they've owned the treasuries for that they can no longer pay back or support. And so if that happens, you saw in my previous video what happened with Luna, then with Celsius, we're going to see an even bigger drop. And all of this stuff isn't backed by the FDIC. If they're insolvent, there's no protection for these companies. They're either going to go away or they're going to have to quickly scramble to get some liquidity or some cash or something into those accounts. So I'm going to stop the video here, and I want you to watch my next video on what to do if you're in a situation like this, if you're still in the market or out of the market. There's two very specific things that I'm going to do, and you can do them if you want. I'm not a financial advisor, but I'm going to tell you what I'm doing in this marketplace. Hey folks, my name is Mark Fidelman. I am the host of Kryptonized, and I have a special tip for you today. It's Tetraguard. You can find it at tetraguard.io. This is the first decentralized ETF consists of Bitcoin, PaxG, and Ethereum. I recommend this. If you just want to get into crypto the easy way and have some solid crypto tokens that are in this particular ETF, then Tetraguard is the way to go. Check it out.